Yeah, good evening, colleagues. How are you? It would be good to know that you can hear me. So let's be so sure. Please help me with your emojis. I can see for now, but you can still keep them up so that by the time I want to say it, it will be easier to say. And also confirm that within the period of 5 days break that you had, within the 5 days break that you had, you were able to at least review what we learned. And somebody made a comment that is very interesting, and I would have loved the person to give me feedback. The person said what I thought. He wants to prove it from a higher authority, right? From the feedback form. And I actually like that. I like that you fact check the things I teach you. It's important. All right. So, but I'm speaking as one who has taught several diets, and at least as far as this course is concerned, I don't know, but I think I'm one of the very few people that can teach it. And it's a privilege also to that you're in my class and you're also listening to me. It's a privilege. I do not take it for granted. So on that note, I'm saying thank you again for joining tonight's class. Um, Thank you very much for joining. So let's get into today's conversation. I'm just trying to make sure that my YouTube audience can also hear me, and so it would be good to have reactions from YouTube, so that will be good on our sides. Uh, we cannot move on with the other platform because typically we are over 500 on the call on a normal day. So, and the Google Workspace can only take 500 people maximum. So it is for that reason we are not able to what's the word now, to use only Google Meet, right? So, but it will be good anyway to have it all. It will be good also that people on YouTube are able to ATAX. And for those who joined, I will just wish you congratulations. You were able to join today. You may not be able to join on Google Meet next week. And perhaps I also know that you were informed. I had informed you before, but you were informed that your class is 4 hours, and I'm sure you are prepared for that. So let's get into today's conversation. You can keep your emojis coming. It's will show me that I'm impressed by your level of participation. I'm very much impressed here. Get a coffee for a small class like this one. Get a coffee. Yeah, you can hear me. Good, you can hear me. I'm not. You can hear. Good, good, good. Yes, I think I've explained. Yeah. Yeah, Clementina, you've been joining us before. You're unable to join again. Such is life. Oh, people are happy now that they're on Google Meet. Don't worry, they'll be your friend the next couple of days. It's really amazing. how people are able to join on time. Maybe I would imagine that a lot of you are using Starlink now, because even me self, I'll be wondering that when did I drop the link that this number of people have joined? If I myself, I'm shocked. So I don't even know who is shocked more than who now, because before I even drop the link, it's like some people walk by the spirit. Major reason why I don't use the same link I used in the last class. A typical me would have used the previous link, but I just don't want to use it for some reasons, because I just feel like a lot of you would have do not be fair. But still yet, everybody's still able to join. That's commendable. All right, good. So last class we started to look at basis period, and I'm sure we had a very good conversation there around basis period. Right. So we are still looking at basis period today, but today we're moving straight to changes in accounting date. But before I move straight to changes in accounting date, can I have a validation that you all understand commencement? Can you please validate that you understand commencement? Sorry, can you hear me now? Is it a bit better? Okay, good. Good, 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 good. So step one that I just came up within that 2 minutes. We'll be able to conquer the forces of the step mother. So let's go ahead. Hmm. Any moment from now you see my screen, just let me know once it is up, so that we go on. All right. Can you see my screen? Can you see my screen? For those on YouTube, can you see my screen? Okay, good. So that's be good. All right. So remember, um, by way of reminding you, we said commencement is when a business starts operation. And we said for year one, the business period shall be from the day of commencement to the first accounting year. The second year shall be from the day after the previous accounting year end to the second accounting year end. And for the third accounting year, we said it's a day after the previous, then to the third accounting year end. Right? That is that. Remember, I told you that please, I beg you, I beseech you by the mercies of God, that if you the last time you did tax was around 2005, 2006, 2010, 2015, please, you need to delete what you know before, and then you need to delete and then redo. You get, you need to undo, then redo. So you have to unlearn and then relearn. Do you understand? So you have to bear in mind that this thing, most of the things we are going to be saying in this class for this diet will not be consistent with what you've known before. Even me as a teacher, I have to learn many of them again, right? So meaning that you have to learn, you have to be open to learning. That's the whole idea. And you don't have to be fixed with what you know before. We are going to be disturbing a lot of things you've known before. So now, good. That said, or better still, let me do it this way. Sorry, am I typing? Did you see anything on that screen? Okay, good. All right, makes sense. So now let's move straight to changes in accounting debt so that we don't waste much of our time. Changes in accounting debt. So what is changes in accounting debt? Right. What's changes in accounting debt? Now, first we have to understand that changes in accounting date occurs when a business refuses to make up its accounts to the usual accounting year. I'm sure it's bold now. I'm sure it's bold now. I've increased the screen. I've increased it and it should be bolder. Is it bolder? Okay, it's bolder. Good. Now, so we said changes in accounting date occurs when a business refuses to make up its account to the usual accounting year. That's it. So changing accounting date occurs when the business refuses to make up its account to the usual accounting year. That's the first thing We need to all understand that there's a change in accounting date when the business rules make up its account to digital accounting year. Right, that's it. Good. Now, let me give an example. I have been making up my account to June. Then I decided that I want to conform with the date of birth of my stepmother and then change from June to December. Then that becomes changes in accounting dates. That's on the light channel anyway. Now, to be real with you now, what we are saying in essence is that if you're making up your account to June and then you now say, okay, because of some reasons you want to change to August, you want to change to December, what has occurred is change in accounting date, right? So for proper context, we said changes in accounting date occurs and the business refuses to make up its account to the usual accounting year end. Now, let's now put it. I hope you understand what I've said to this extent. That changes in accounting date is when you refuse to make up your account to the usual accounting year. Good. Now, what are the reasons why you may want to change your accounting date? Number one, let me tell you, let me tell you a story. And I hope that the story is not even a stale one because me that I want to tell you the story too is a second hand. Okay, it's a first hand story. Okay. So remember in 2005 when the government decided to say that okay, oh, let us have a couple of people or let us have all banks now change their accounting date to December. That was when there was a major shake up in the bank, the recapitalization era, the Soludo era. If you recall that time, most banks before that time they could have dates, different dates for their reporting, but after that time were just forced to conform to 31st December, right? And for example, you would have before that time you could have banks borrowing liquidity from other banks just to make up their balance sheet because obviously they have different reporting dates. But after that time, the secret of many banks became revealed, and obviously many other some banks could not stand the test of time afterward. All right, there was a major shake-up in the banking industry. All right, so what I'm trying to say there is you could have a change in accounting dates to conform with regulatory authorities or to conform with the government. That's the first reason why you want to change your accounting dates to conform with the regulatory. All right. Number two, you know, in this part of the world, right? Please, can people on YouTube, can my colleagues on YouTube see my screen? Can my colleagues on YouTube? I just need a feedback that yes, you can see my screen on YouTube. I'm seeing the comments, but I'm not playing the video, so it's not real time for the video. Okay. Can you see? Okay, good. All right. So that's one to conform with regulatory authority. Number two, I was saying that just like when a man marries a woman, right? And the woman is then under necessity to change their surname after that acquisition, right? Or after that merger, sorry. Or whichever one you think it is, whether merger or acquisition, whichever one you think it is. But there's one part that is forced to change a surname or had a surname after that acquisition or merger. So the same way, when a parent company, right, buys or acquires a subsidiary or gets a subsidiary, then the subsidiary will be forced to change its accounting date to also comply or conform with the parent's accounting year end. Does it make sense? With the parent's company. Right, number three. Number three, right, is some companies just feel that December is a very busy time, right? A very much busy time, or June is a very busy time. So they are reporting, they just want to make sure that they do it at the time so they can change it for effective planning purposes, for effective tax planning purposes, for effective tax planning purposes. All right. So that's that about that. Now let's go to the rules. What you are familiar with is the old rule, but now what we are supposed to know in this class is the new rule. Now the new rule is simpler compared to the old rule, very much simple. So we won't waste a lot of time. Remember that there's a change in accounting date, right? So what the rule prescribes is that because there's a change in accounting date, there's going to be a gap in the basis period, right? Obviously, there's going to be a gap. So because there's going to be a gap, just introduce a what's the word now? Introduce a basis period that will address the gap on preceding year basis and continue with a new date. Do you understand what I just explained, or you want me to explain that again? If you understand what I just explained, say yes, you understand. If you don't understand, say take it again. Okay. Okay, good. So the so good. Let me explain again. Now, the changes in accounting date, right? Let me take that again. For a basis, so say for example, you've been doing June, you've been doing June, you've been doing June, you've been doing up to June every year, all right? And you now decide to do December. So there's going to be that year that you will not do June, that you will not do June, but you do December. So there's a gap already in that year that you changed your accounting year end, right? So that year that you change your accounting date, there's going to be a gap. So what the rule is now saying is just make sure that you introduce a date, right? A basis period that addresses between June to December, right? On preceding year basis, and continue to continue or move on with the new date. Does it make sense? Good. All right. So I hope that's clarifies. If you understand it now, say yes, I understand it now. There's this way we used to do in my secondary school when I was in secondary school. When the teacher explains, although we don't understand what the teacher said, but all of us just scream, eh, just so that the teacher will release us. I hope that's not what you guys are doing now. Just do so that the teacher will release us, so that at least he will move on with his life. We will go and solve our problem. So, uh, you get. Hope that's not what you guys are doing. But obviously, I'm sure you understand. For my colleagues who don't understand yet, I'm sure let me introduce if once I introduce this illustration, it will make sense. Or better still, let me explain it again. Let me try my luck this time. Right. What I'm saying is this. Typically, you've been preparing your accounts to June every year, right? So there's that year that, yes, I will obviously I'll write it in notes, but you first have to understand the context first before I put it in the notes, right? So is this guy has been doing June every year. He's been doing June every year. So now that he's stopped doing June, he now wants to do December. So the first year he decides not to do June and it does December, there's going to be a gap between June and December, right? Don't forget where we started from last week. Your basis period should not be more than 12 months. Either ways, it must not in any case be more than 12 months, right? So if you look at that, that means there's a 6 months gap before you switch to the new date. So what the law is saying is that you should just introduce a basis period that will address that gap of switching to the new date. Do you understand? Does it make sense? So let's now put it in writing. All right. Rules for changes in accounting dates. So where a business decides to change its accounting date from a year end to another, a basis period is introduced on preceding year basis to address the gap, right? So the basis period will cover, are we together? For the period less than 12 months and subsequent years after the change shall be on preceding year basis. All right, so that's it. Shall be on preceding year basis. Right. Now, what do I then need to do in that case? Are we together, please? Now, why? So in this case, what do I need to do? The taxpayer shall notify the tax authority within 30 days before the usual date of filing income tax returns. Right, so that's set. So let's quickly do an illustration so that it will be clear. Now that we've exhausted all the names that we had in last class. So maybe we'll come up with new names this today. Right. Maybe we'll come up with new names. So Balabro Limited. Abi? Balabro Limited. Commenced business on 1st on 1st June 2020 and provided you with the relevant additional information. Period to 30 June 2020. Sorry, 31 December 2020. 8,250,000. Year to 31 December 2021. 21,400. Year to 31 December 2022. 24,600. Period to 31 March 2023. 9.2 million. Year to 31 March 2023. Then I have 34 million. Required. Determine the basis period and accessible profit for the relevant years of assessment. All right, so maybe I should do it this way. Can you all attempt? So let's see your attempt. The new date cannot be more than 12 months. The new date cannot be more. So can we all attempt in 2 minutes? Even if you're on the road, park on top Mainland Bridge and attempt it, I beg. I need you to attempt testing. It's not me, it's not me that tell you to do that. Or just park on top Mainland Bridge. Try to attempt. Do you understand? So I'm not seeing by now I expect you guys to start showing me numbers already. Hello. There's no number coming photo. What's happening? You have illustration on the group, I mean on your screen already. Can you see my screen? Okay, so I expect 1 or 2. Let's move on, let's be fast. No, I'm not talking about the year of change alone. I've tested. So for this one now, I'm testing 2 things combined. I'm testing both commencement and changes in accounting date. So the examiner is a woman. All right. So don't just X. You guys are on strike. I'm seeing a lot of smart people. They want to smart. So they want to outsmart me already. Somebody from is saying 2024. Put the number there. It's the basis period that is the issue now. I know the. I know you guys will get the number. And I'm now using my. You guys are interesting. It's the basis period that you should show me now. Show me basis period. It's the basis period that I want. Do you scope for me? Okay. Yeah, I'm now seeing what I need to see. Somebody's now parading. Interesting. I don't know what you're parading for. I don't know. Keep up the good work, Oluchi. Why are you parading? Let me want to ask you. Why are you parading? Why? Since it's over 12. That makes sense. I'm not saying your parading is not good though. I'm only asking why. I'm seeing the first year basis period. Like, so a lot of people got the basis period correctly for the first year. There's a spirit on YouTube already, it's the spirit of excellence. So that so good because the period covers for 6 months. Makes sense. Good, 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 good. All right. I have 1 more minute. I have 1 more minute to address that issue. And I'll be moving straight to the next thing. Hmm. Bright did not do his own. Oh. It's the person that is doing that is attending to. Bright. Ah ah. All right, good. So let's keep it up. By my watch, it is 7:50 p.m. So we can now solve it. Now that I'm taking my time to teach you this simple thing, simple. So please listen. So the first thing is to say that determination of basis period on accessible profit for 2021 to 2025 years of assessment. Right. So I have 5A basis period. We have accessible profit. Right. So let's go ahead. Remember, for commencement, the rule is simple. From the day of commencement, what's the day of commencement? 1st of June. So that's 1/6/2020 to the first accounting year end. So this man has been repeating December, December, December. So December is the accounting year. So that's 31 December 2020. Do I have it here? Yes, I do have it here. That's 8,250,000. The year of assessment, 2021 year of assessment. 2022, a day after. That's one. Sorry, it's 31/12, not 31/6 here. It's typographical error. 1/1/2021 to 31 December 2021, right? So I'll look for it. That's into 1,400,000. I have 1/1/2022 to 31 December 2022. How much is that? That's 24.6 million. Now this man has changed from December to March, right? So I'll just say 2024 year of assessment. 1st of January 2023 to 31 March 2023. How much is that? 9.2 million. And finally, we see 25 1/4/2023 to 31/3/2024. And there you go with 34 million. Why understand? Any question? You see that this one is simple and the old rule. I don't know what those old people were thinking when they were doing the old rule. I don't know what they were thinking. And they will be saying that they are brilliant than we, the younger people. They will be saying we are young, they are older. All of them, all our parents were first position in their class. I wonder who took class in their class with the laws they were bringing up. Okay, good. All right, so that's simple. So that's how to address it. So you just introduce the basis period to address the gap, and then you move on. I'm seeing ants. I don't know if I should attempt. Martina and Aji, is it that you have a question? Do you have a question? Okay. Yeah, so no overlap. Good. So two of you, let me allow the two of them only speak, so it will only be my show. So Martina, please go ahead.
Good evening, sir. Thank you so much. Just a small clarification. Where the basis period change, I notice you still use the complete amount. Are we not supposed to prorate it, or are we supposed to use the complete figure that was in that period?
You will notice that the examiner said period 2, right? So period 2 suggests that the period is already less than 12 months. And if the period is less than 12 months, then you will just pick that period. So you don't need to prorate at all. Does it make sense?
Yes, it does. So, but what if okay, yes, it does. It does. Thank you.
So so in the case, the only reason why you would have to prorate if that period to figure is over 12 months, that's when it will make sense to prorate. But if it's less than 12 months, the examiner has already told you that that period is just that figure is only for you to address the gap. Do you understand?
Yes, sir. Thank you.
You're welcome. All right. So I believe that's addressed all other person's question. All right. But again, I'm not ignorant of the wiles of everybody. If I should leave the microphone on like this, just be hearing funny things from background. We get so good. So do we have good? Somebody asked, what's the difference between period two and year two? So your period two shows that the basis period you're dealing with is less than 12 months. Your year two is indicating that it is more than it is a 12-month period. So when you have year two, the examiner is telling you that the period is 12 months. When you have period two, it will either be more than 12 months or less than 12 months. Yeah, good. Does it make sense? No thinking required. So let's move straight to cessation of business. Okay. So I said period two suggests that it's less than 12 months. Year to suggest that it is 12 months period. Period. Anytime you see period two, the examiner is telling you that that period is either 12 is less than 12 months or more than 12 months. But anytime you have year two, it is a 12 month. I know that somebody will still ask me this question. Joseph, are we not supposed to prepare account based on old date and new date? Please, you are not to do that. That was in the olden days. So in the new days now, life is simple with Gen Zs. Abi, you don't have time. So that's it. So that addresses the changes in accounting debt. So let's move on. Yes, cessation of business. So it's, a business is said to cease when, yes, the law affected only changes in accounting debt. All right. So but somebody asked, does the law? No, the examiner should not be asking you that the old rule now. Old things have passed away and old things have become new, right? So the examiner should not be asking you what the old law says when we are already in the new dispensation. Do you understand? Except if the examiner is an overthinker, and I don't think ideally he should. You get, there are some people that they overthink everything. You greet them, they think it. You don't greet them, they think about it. You say wow, they think about it. You say wow, wow, they think about it. So they think that we have people like that that overthink, right? But the examiner should not be an overthinker. So it's just the old, it's the new rule that you should know. So let's go into cessation of business. A business is said to cease operation when trading and administrative activities regarding the business is stopped. Right, that's it. So trading and every other activities regarding the business is stopped. Then we say the cessation of business. That's it. So you are not doing business again. So let's move straight to the rule, right? Yes, there's no need for old and new dates anymore. We're finding it funny that changes in accounting, that thing, that's old date and new date used to traumatize people. Traumatize a lot of people. But you guys are now overcomers. Don't worry. All right. So where a business ceases before the 6 months into the year, that's 30th June, the business shall be assessed to tax on actual year basis in the year of cessation. Where the business ceases after 30th June, the business shall be assessed to tax on preceding year basis, right? The due date for filing shall be 6 months from the date of cessation. All right, shall be. I don't understand. All right. So let's go ahead. Let's do illustration. Let me explain this context, this concept very well. Remember that we used to have something that looks like the ultimate year and penultimate year for the old accountants. There's something they call penultimate year and ultimate year that you should do and check, check, check. But that one is really not a thing for us to check again because the year before the company ceases, the company will be assessed to tax on preceding year basis, just like it is ongoing. Right. Now, after the business has ceased operation, the year the company ceases operation is a major concern. So we are checking, will the business, right? Or does the business, or did the business cease before June or after June? So if the business ceased before June, the business will be assessed to tax on actual year basis in the year that the company ceased operation. Right. But if the company ceases after 30th June, say for example August, or say for example September, then the company will be assessed to tax on preceding year basis. Does it make sense, everybody? Mm. Does it make sense? If it makes sense, say yes, it makes sense. If you need me to recap, say recap. All right. So again, if the company says before 30th June, you do it on actual year basis. If the company sees after 30th June, then it will be on preceding year basis. Doesn't make sense. Somebody said life is simpler now. To be honest, life is a lot simpler now because I can't even imagine what some people were thinking, and they sat down in a room and they say once you fail a topic, a subject, you fail all the exam. I can't imagine. Thank God I didn't do those kind. I was not in that kind of era. And all of them, they are bragging that it is fail one, fail all. So life is simpler now with Nigeria. All right, Temitope, your hand is raised. Is it that it was that a mistake, or you have a question you want to ask? All right, let me turn on my mic to allow Temitope speak. Temitope, please go ahead. Temitope, oh, it was a mistake. Oh, sorry. Please put down your hand because it will soon be paining you. The exams were not simpler. How would these rules? If I tell you the whole rule, it will shock you. That commencement rule, the whole rule doesn't make sense. You have to cram it to know it. The changes in accounting, it doesn't make sense. You have to cram it to know it. Life is not simpler then. The exams were not simpler then. And then somebody will just sit down and say, because I failed tax, that means I failed XFM. Is the person not thinking straight? Oh, unmuted myself. Your mic, you didn't unmute your mic and go ahead. You can type your question so that we don't have to drag time. So illustration. What number is our illustration now? 6. So I'm waiting for you to type, or Temitope, you can speak now. Yes, Ewa, you don't determine the old date and the new date again. Is no longer applicable. That's the old rule, and the old rule is gone forever. So this is how to do it under the new rule. That's the provisions of the new law. Right, good. Tell me the way you can speak. I'm not sure she's on the call again. Let's move on. So let's go ahead. Illustration 6. Which name will I now use? Oh, okay, I will find name. Profile Limited has been in business for several years. However, the company decided to cease operations because of adverse economic condition. You are provided with the following additional information. Year to 31 December 2023, 16 million. Year to 31 December 2024, 2.2 million. Period to 31 March 2025, 400,000. We are required to determine the basis period and accessible profit for the relevant years of assessment. All right, good. Here's solution. But let me ask you, let me give you 2 minutes to attempt it. So if you're on Top Milan Bridge, please park so that you can attempt it. Park your car and attempt the question. So do you have any trial? I should scroll down a bit. The reason I'm asking you to attempt it is, at least if you are not even able to attempt it, you would have read the question again and at least have a brief understanding of what we are about to solve. So that you won't be asking, you won't be confused as to where I got the numbers from. That's the idea. Just an idea of you. Even when I'm going to be dealing with long questions, I'll be giving you the questions before the class so that at least you would have read them. And by reading, that means that you're a bit familiar, you are now more familiar with what you have there. Are we together? So do you have any attempts? Yeah, for the year of physician, yes, you are correct. You use precision, use actual business. Very interesting one. I've seen, so you guys got it correctly. You guys got it correctly. So let's solve it together. So the major issue is the year the company ceased, right? That's the major issue. But let's pretend as if we want to start from beginning. So Rufai Limited. determination of basis period on accessible profit for 2024 and 2025 years of assessment. Right, so I have YOA, I have basis period, I have accessible profit. Let me also include a line and say due date for filing. So what's the basis period for the first one? It's going to be 1/1/2023 to 31 December 2023, meaning that the year of assessment is going to be 2024. Right. In that case, the profit will be how much? 16 million. Well, we said the due date for filing will always be 6 months after the year end. So that's 36/2024. Right. So we then have 2025, 1/1/24 to 31 December 2024. That's how much? 2.2 million. The due date for filing will still be 36/2025. Then you do 25 again because the company ceased before June, right? So I will now have 1/1/2025 to 31 March 2025. That's 400,000, right? The due date for filing is going to be 6 months. That's 30/9/2025. Does it make sense to you? Does it make sense to you? For my colleagues, does it make sense? Colleagues on YouTube, does it make sense? Just say yes, it makes sense. You don't really understand. Okay. Is it the year of cessation? Okay, so we are doing 6 months from the year end or from the day of cessation. Okay, so April, May, June, July, August, September. If you count 9 months, 6 months from March, it is always September now. Abis mean is April, May, June, July, August, September. Abi? Yes, there's a date of cessation in the question. The examiner told you there's the date of cessation. He stopped preparing account on at 31st March. So since he stopped preparing 31st March, that's the day he stopped operation. Because once you don't prepare account and you are not selling anything, you have stopped operation. So it's not in all cases the examiner will tell you that he stopped business on so day. Do you understand? Does it make sense? Good. You would have, I'm seeing a lot of old people here. Oh. Somebody even still remember the right of election. Wow, you are an old man. So somebody asked, why do we have 2025 twice? We have 2025 twice because the company ceased before June. So even the final year will still be on actual year basis. So the first year was going to be on preceding year basis, then the next year is going to be on actual year basis. Yes, the due date for filing will be 6 months after the end date you have in the basis period. It's 6 months after. Right. So if we look at it gently, right, we have this date, we don't have any issues, an ongoing business here. So it's going to be from 1 January to 31st December 2023 but the second year is going to be 1 January to the December 2024. Right. So 2025, we now have 1 January to March 2025. So is March before June or after June? So if March before June or after June, you ask me March, you answer March is before June, a bit. So you're going to do actual year basis. Remember, we had said that the actual basis means the last date you have in the basis period must be the same thing with the year of assessment. That's what we mean by actual year basis. So in that case, you will still use 25-year of assessment. And obviously, the due date for filing is going to be 6 months after. So 6 months after December is June. That's January, February, March, April, May, June. And 6 months after March is September. That's April, May, June, July, August, September. Right. Does it make sense, everybody? All right. If it does make sense, then let's move to another one. So illustration is same as above. Except that the company says on 31st August 2025. June is still that 12 months is still December. If the company says in June, so that's the actual year basis. Right. So in that case, you have everything is still the same thing, only that the company is now says in June. So at least we don't have issues with the first 2 years. But our caption will change to 2026 year of assessment. So you have 6 year. You have 6 year. So you have 8 year. And then you have September, October, November, December, January, February. 28 to 26. It doesn't make sense. No, now you assume the year, you assume the last date of every month. There are a lot of overthinkers in this classroom. You assume the last date of every month. Do you understand? So the examiner will not give you the mid-month, so it's going to be the last date of that month. All right. Are we good? Do you understand what you have on your screen? Do you have any question? All right. So okay, please, if you have any question, let me allow. If you have any question, please. If you have any question, please raise your hand. If there are no questions, I will address the ones in the comment section. So somebody said, so like I don't understand now, it's not a question. So I don't know. You've only made the comments. I really wish to know where out. I'm sorry you don't understand. But if you have specific questions that will guide me as to what you don't understand, I'll be willing to answer. Yeah, why is the year now 2026? It is 2026 because August is after June, right? So since August is after June, it's going to be the following year. I hope that answers. That's remember the rule. If a company ceases before 30th June, it's going to be on actual year basis. If the company ceases after 30th June, it's going to be on preceding year basis. The due date for filing is going to be 6 months after the year end or 6 months after the date of cessation, right? So the company ceased in August. So you have September, October, November, December, January, February. Do you understand? That's the way it should have been decided for last diet, Chiwendo. If they are dealing with cessation, that's the way it should have been because this is Finance Act 2019. So it's been applicable since 2020. All right. Do you have any question? The question does not have a cessation date, but the examiner told us that he ceased already. So the examiner told us he ceased business, and the last date of account is the date he ceased business. Do you understand? So the last date of we are already aware that he ceased business, right? So the last date of that account is the day he ceased business. That's it. So it's not everything the examiner will be writing in full that he ceased business. No, you are not. That's not how to. Sometimes they just imply it by what they say. All right. Any question? All correct, Abby? If it is clear now, tell me it is clear so that I can move on to the next topic. So the last part is saying, I don't know which one is the last part to go through. Taiwo, I wish I know the last part, but there are a lot of things I've said, so I don't know which one you're referring to. Yes, the figures are not changing because the only thing that changed is the date, right? The only thing that changes is the date, not the figure. So if the change date is the only thing changing, you only change the date. If the figure is changing, you only change the figure. Do you understand? All right, good. All right, that's very clear. Good, good, good. All right, makes sense. Now the next thing we want to go for now is loss relief. Is loss relief. Right. Maybe I should ask by saying or by asking you, what do you think should be loss relief? Let me give 1 minute comment. I need your comment on what do you think should be loss relief. What do you think should be loss relief? I don't say what I didn't ask that what is loss relief. What do you think should be loss relief? Hmm? Relief gotten. So the due date for filing is the 6 months after the date, the last date in the business period. Just count 6 months, right? So for example, 6 months after December is June. 6 months after August is February. 6 months after April is going to be October, right? It's just 6 months after the end date, right? That's it. All right, I'm seeing some interesting comments here. So number one, somebody said relief gotten from having a loss in business operation. Uh, um, Good. Compensation exception for paying tax as a result of company making loss. Fair. When you use the loss you have made in your business to reduce taxable profit in coming years. Excellent. Good. So it means all of us have a good understanding of what loss relief is. Is that correct? All right. So let's go ahead. Let's write. Or maybe before we start, let me give a bit of contextual background to it so that you appreciate it better. So in the year a business makes loss, it will still be expected to pay tax, provided the company is taxable. By the time we get to company income tax, we'll understand that better, right? But just have it at the back of your mind that if the business makes loss, it will still be expected to pay tax, right? Now, the tax authority is then of the opinion that if you're expected to pay tax in that scenario, right? If you're expected to pay tax in that scenario, then what will happen is that in the subsequent year where you make profit, your tax liability should be reduced, right, for the losses you made in the previous year, right? So we can then safely say that loss relief is a relief granted to a taxpayer for making losses in the prior period. So I think I've addressed this Michael's issue before, but let me say it again. By God's grace, all things being equal, these diets, they are testing the new rule. And if you are also in my first class, I am taking you through the syllabus, right? And we saw clearly in the syllabus that they are testing the new rule. Is that correct? So ICANN is working on the new textbook, on a new document that should be out. Whether or not it will be out before your exam is something I don't know. Right? I must be real with you. It doesn't make sense. So I think I've addressed Michael issue. But what you have, the current study pack you have now follows the old rule, but that is not a document for your exam, really, because the adjustments for new rule have not been made. Doesn't make sense. Good. So let's come back to loss relief. So loss relief is a relief granted to a taxpayer for making losses in the prior period. So good. Let's write that down. Say, that is, the loss made is recouped from profits in the subsequent year before determining tax liabilities. Right, that's it. Does it make sense? Good. Now, let us look at the rules that we have to consider. But before we look at the rules, let's look at types. Number one is current year loss. CYLR. So this is a relief applicable to, no, let me use the correct word, granted to individuals. The individual must apply in writing to claim the relief, right? Loss made under this relief is carried forward. Sorry, is relieved, is recouped, sorry, from the from other business sources or from other income sources in the same year of assessment. All right. Do you understand? That's current year loss rate. Number one, it is only applicable to individuals. Only individuals can claim loss rate. That's the first thing we have to note. Number two is that if you want to claim it, you must apply in writing. The third thing we want to claim is that you can recoup it from other income source in the year of assessment. Right. Now let's go to the second one. Carry forward loss rate. My stepmother is coming in now. I don't know what's wrong with me. Or those who were with me, they know what I mean by my stepmother is coming in. The note is not showing, Alaba. Is that same for everybody? Is the note not showing? Okay, let me do it this way. Is your network, but let me just. I would have advised that for those who cannot see my screen, for those on YouTube, can you see my screen? Okay, good. Carry forward loss. So this is a relief that is granted to both individuals and corporate taxpayers. The taxpayer need not to apply in writing to claim this relief, right? Loss made is relieved from the same income source in the subsequent year of assessment. Good. So two things you want to note here. You will see from the same income source. That's one thing we want to take note of. And then subsequent year of assessment. Doesn't make sense. So those four things are things you want to take note of. Any question? Any question? Okay, let me explain the types of loss relief again. The first is the current year loss relief. Right. Current year loss relief is for individuals, right? Number two is that for you to enjoy that relief, you must apply to relevant tax authority in writing. Right. The third thing is that you can only recoup that from other income sources. So for example, I do 9 to 5, I collect salary, right? I am a consultant, I do consulting on the side, right? And I also earn income from that. Then the next thing is, say for example, I also do trainings for corporate entities. I earn income from that, Abi. And say for example, I'm also in partnership with other people for ICANN online classes. I make money from there too. Do you understand? But let's say for example, for the consulting business, I run on a negative, right? Then what that would mean is that for that consulting business, there's a loss. So the loss from that consulting business can be relieved from salaries and other income in a year of assessment. Right. So it's the net income of myself in that year of assessment that will be subjected to tax. Does it make sense? Do you understand? I hope you understand current year loss relief. Good. Now let's move straight to the carry forward loss relief. Is that the same Mustafa Ibrahim that I know? I very that should be Mustafa Ibrahim, but again, sorry. Oh, good. My very good friend. I want to connect with you after the class. All right. So, carry forward loss relief is applicable to both um, corporate entities and individuals, right? Both corporate and individuals. That's the carry forward loss relief. Don't forget that your current year is only for individuals, but for carry forward is for both. Okay, you want me to explain? So let me explain current year again. Number one, what pre-qualifies an individual for current year loss relief is the fact that it makes loss from one business and it does filing. That's all. Do you understand? But in case it makes loss, he has to apply to the tax authority explaining the lines of business he has and the loss he made from a particular line of business. That's it. But like I said, it is applicable to individual for current year. You have to apply in writing to claim any relief in that case. And number three, your income from one source can be relieved from other or recouped from other sources in the same year of assessment. Does it make sense? Now, let us deal with carry forward. Carry forward can carry forward is for both individuals and businesses, right? But it's more practicable for businesses. Good. Now, you don't need to apply in writing to claim this relief because the loss you made last year, and everybody is aware that you made the loss. Right? So you don't need to apply for anything, right? And then the next thing is that the loss you make right in that year will be taken to the next year before deducting for profit. Does it make sense? Does it make sense? Are we together? So in if the individual has only one source of income, so it means that he will have to do carry forward. That's why carry forward window is still applicable. Do you understand? That's why carry forward window is still applicable. So if you make a loss and it's just one source of income, you carry the loss forward to the subsequent year of assessment. Does it make sense? I want to advise you that if you cannot see my screen, just log out and log in again. But I just remember that if you log out, there's no guarantee that you log in again to the end of this class. Yeah, Olufunke, your hand is raised. I want to believe you have a question. So you can quickly unmute your mic and quickly speak.
Okay, so thank you, sir. My question is on the current year loss relief. So that is granted to, so can it only be enjoyed by individual, because you are saying
By
it to
God's
have
grace, yes.
so no other income.
It is only applicable to individuals. All limited liability companies will be expected to do carry forward loss relief. Have I answered the question?
Yes, sir. Thank you, sir.
You're welcome. So, okay, good. So let's quickly move in. Yeah, Alaji, please quickly speak. After Alaji, I'm not taking any more questions.
Good evening, sir.
Good evening, Chief.
Sir, since you mentioned that carry forward loss relief is for corporate taxpayers, why do you then mention the individuals? Because individuals is attached to it. So I was thinking individuals is strictly for the first one, whereby companies is for the carry forward loss relief. So that is my question. I need clarification on that.
Good, good, good. So it is possible that individual has just one source of income, right? So if he has one
Okay.
source of income, like a trading, like a sole trader, for example, and he makes loss, the loss he provides that he can take that loss to the next year. That's why carry forward is applicable to both individuals and corporates. But
Okay.
corporates cannot enjoy current year. Individuals enjoy current year because individuals are likely going to have multiple sources of income. So loss made from one can be recouped from other. But for carry forward loss relief is only for, I mean, it's for both corporate and individual. I hope that clarifies.
Thank you, sir.
You're welcome, sir.
Mm.
All right, good. So let's quickly move on to the rules for loss relief. You see why this my long class pays me. Assuming it is that or 2 hours now, I will be forced to end the class abruptly, but now I have ample time. So I can play, work, and do all of that. Do you get? So number one rule for loss relief. Number one rule. Number one, loss to be relieved should not be more than the actual loss made. Now, let me explain this. I'm sure the old people, the millennials will relate with this one very well. That's those that have started taxes long time ago. Those that started. So let's move on. Somebody is asking individuals like Olukunle, individuals like Olasumbo, individuals like Taiwo, anybody. So far, you are a person, you are a human being, you are an individual. Good. So, I was saying something. Loss to be relieved should not be more than the actual loss made. So I was explaining that for the older accountants now, they will relate with this very well. Remember that your new rule, that your old rule, that rule that you guys used to like, right? The From the day of commencement to the 1st December of that same year, from the day of commencement to 12 months period, In year 3, you check, is it up to you do start from preceding year basis, you end in the accounting year. If it does not meet the 2 rules, repeat year 2 in year 3. What you will notice is that the same income is what you've recognized 3 times. Is that correct? Because first year you said from the day of commencement to 1st December. From the day of commencement again, you have recognized the same income 3 times. And ideally, although there is right of election, so except if you register as a business name under CAC, that's when you are still individual. That's when you're a sole trader, right? But if you are a limited liability company, then you are not an individual. You're a limited liability company. Do you get? So yeah. So I'm using to explain, right? So you recall that you are recounting that law. You are recounting the same profit multiple times. What you will notice is that if it is a loss, there's a loss double counting. So the law is now saying that any loss you want to relieve should not be more than the actual loss, right? Should not be more than the actual loss that you made. Do you understand? Losses to be relieved should not be more than the actual loss made. Do you understand? So if you make 200,000 loss, it's only 200,000 that will be recouped, whether or not. But this law now is not even applicable again because the absurdity in the old rule has been replaced, right? The absurdity is no longer there, right? So that's one. Number 2 is that loss can be carried forward indefinitely, right? Loss can be carried forward indefinitely. So it is individual gifts. Gift Ventures as a registered business name is an individual because it's still a sole proprietor. All right. So that's it. Loss can be carried forward indefinitely. Are we together? If you enjoy it to this extent, or if you're engaging with this class to this extent, please give me thumbs up. Good. Makes sense. Loss can be carried forward indefinitely. Number 3 is that loss shall be relieved before utilizing capital allowance. Right. Loss shall be relieved before utilizing capital allowance. That's the next thing. Loss shall be relieved before utilizing capital allowance. Then number 4, loss made in the year of cessation shall not be recouped backward. That means you cannot recoup losses backward. You cannot recoup loss backward. Do you understand? You can only recoup loss forward. You cannot really recoup loss backward. Does it make sense? Then the next one, number 5. Are we together? Right? Is that loss made? Let me clarify this for myself before the questions start coming. For corporate entities, Loss made from one business cannot be relieved from other business sources. Right? Cannot be relieved from other business sources. Right? Do you understand? Are we together? Any question? Olubumi, your hand is raised. Do you want to ask question? If you want to ask question, you can quickly unmute yourself and ask.
Hello, sir.
Please go ahead.
Hello, sir.
Yeah, please go ahead.
Okay, sir. Thank you for your help, sir. So I want to ask. You said that loss cannot be recouped backward. So
Yeah.
what does that mean, sir?
Okay, so
That's my question.
so in the case of cessation, right? Many businesses, even after cessation, still has loss. So in that case, the loss cannot be taken backward. The loss can only be taken forward. Do you understand? The loss cannot be taken backward. The loss can only be taken forward. Do you understand? So any loss you make in the year of cessation will be deemed lost forever. If you make loss and then the company ceases operation, then that loss puts in law. You get. All right. Gifts, comfort.
All right, good
Comfort
evening,
is the
sir.
last person now. Okay, give. Please go
Your
ahead.
for the rules for loss relief, the number one says loss to be relieved should not be more than the actual loss made. Sorry, can you explain that?
So what we're saying is that if you make loss of 400,000, you cannot claim more than 400,000. Do you understand? If you
Yes,
make
I
loss of 400,000, then the loss is not going to be more than 400,000 in any case. All right. Then I think I've answered everybody. Right? So in that case, thank you so very much indeed. Comfort, yeah, please go ahead. Your hand is raised. I hope Bumi's hand is not paining now. All right, so let's go ahead. Illustration. Okay, so now my first period has ended, but I think it is necessary that for some of you that are stretching, so should I give you 3 minutes break? And then it's 9 o'clock already, so 9:03 I'm back here, or 9:05 I'm back here. Is that fine? Do you agree with me? 9:05 I'm here. Okay, good. So there's a 5 minutes break. So 9:05 I'll be back here. No, 15 minutes is too much. 5 minutes is fine. You guys are Oliver Twist. The time starts now, so 9:05. So okay, let's Mary Faith. I know you are from Yoruba, like the way you are pricing this, as if you are pricing pepper. So let's do 9:07. Let's do 9:07. You get 9:07, 9:07. That's fine. So let's go ahead. Adele, Adele. If you are with me, say yes, you are with me. Can you hear me? Yeah. So I've not seen comments on YouTube. That's what I'm waiting for. Good. Interesting. So thank you again for joining. So let's continue. Remember, we had said that loss relief is a relief granted to a taxpayer. We talked about the current year loss relief. We said current year loss relief is applicable to individuals. You have to apply in writing to get it. And also, you have to also relieve the loss from other line of income in the same year. For carry forward loss relief, we said is applicable to both individual and corporate taxpayer. We decided, so we agreed together that you cannot relieve it from other source of income, and you carry it forward to the subsequent year of assessment, and you need not to apply in writing to get that relief. Then we went ahead to look at rules for loss relief. We looked at 5 of them, and that's good. All right, good. So let's get into our next conversation, which is the illustration. All right. So Sam Larry Limited. Presented has appointed you as the task consultant. The company started operations on first FR as well. These FR, these advanced tax on first August 2020. And provided you with the following relevant information. Period 2. Izoma, please, is an oversight too. I would always like to respond to every comment, but you know I'm still human being. Okay. $10 million, 400,000. Year 2, 31 December 2024. 6.3 million loss. Year 2, 31 December 2025. 1.4 million loss. Year 2, 31 December 2026. 3.6 million profits. You are provided with the following relevant information. Capital allowance. Year of assessment. 175,000. 2023. 960,000. 2024. 195,000. 2025. 420,000. 2026. And 180,000. 2027. The company's annual turnover is in the excess of 100 million naira annum. Ignore ignore tertiary education tax and take CIT rate to be 30% of total profit. Compute the tax liability for the relevant years. We good? Yeah. Ah, thank you, Jerry. Thank you, Michael, for the typographical error. All right, thank you. So it's beginning to become serious, Abby. Nothing serious there. But you like this question, Abby? Should I give you 2 minutes to read the question and attempt it? If you don't like YouTube, you can quickly come on. You can quickly come on Google Meet. Actually, I think there's still space for 11 people. I'm willing to accept anybody in now. So if you are willing to join, quickly come. All right. So let's go ahead. So illustration. So solution. Okay, that's my usual style. Oh. Those are people used to complain that one screen is tiny. That's why I didn't do it this style. That's my style. You know what? I'll do that now. It's 11 people I call. It's 37 guests I've seen already. ah, 37 people. All right. So good. Are we together? Do you prefer this? Do you prefer this? Yeah. You prefer me showing the question and the solution side by side, right? Doesn't affect. Okay, good. Good. So let's go ahead. So we have Sam Larry Limited. So determination. So if it's tiny, just use your hand to bolding the screen. Use bolding the screen. Just zoom out from your own end. That's one. For those who said it is blurry, go to settings, something that looks like a knob on YouTube. Click on that knob and then go to improve the video quality. You get. You get. So combination of basis period, basis period, accessible profits, and tax liability, sorry, for 2024 to 2027 years of assessment. All right, so we have there and here. Okay, no problem. How about now? All right, so let's go ahead. Yes. So the first year, remember that this examiner is funny. He showed me that is a commencement question, right? So I'll first start with the year of commencement. The business commenced on 1st of August. So I will do 2023. Why are we happy? What's the adjusted profit? Or let me start by saying the basis period. Try to be clear. Basis period will be 1/8, that's the day of commencement, to 31 December of the same year of commencement, right? Because it must be to the first accounting year, and it's going to be 12, it must not be more than 12 months, right? So what's the adjusted profit? The examiner here gave me 10.4 million, but 10.4 million is to 2023. So it means I will need to prorate. So that will be, I'm picking August, September, October, November, December. That's 5 over 17 times 10.4 million. 5 over 17 times 10.4 million. Right. Do you understand it to this extent? This is the question. Please, you can quickly snap it. Let's be fast. The time is not on our side. Good. So, do we understand what I did? If you understand, say yes, I understand. If you don't understand, say please come again. Somebody asked why 17. So let's start together. August, September, October, November, December, January, February, March, April, May, June, July, August, September, October, November, December. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. That's how I got my 17 months, right? But don't forget that it's commencement. So it's from the day of commencement. That's from 1st of August 2022 to the first accounting year end. That's December 2022, right? Do you understand? So that's how I'm going to prorate that profit. Does it make sense? Does it make sense? If it's clear, say yes, clear. If it does not, just tell me which area you want me to repeat. No, it's not in the same year. 2022 is assessed to tax in 2023 year of assessment. Right. Good. All right. So figure me now, please. Press it. Help me with the numbers. So 305883. 3058,823. Right. So I have, there's no loss relief, right? So that's capital allowance for the year. Based on what I have here, they said capital allowance is 175,000. So capital allowance utilized will be 175,000. Right? So I have unutilized capital allowance carry down. This is the format, really, is nil. Then my total profit, which is going to be the adjusted profit minus the capital allowance. What do you have, please? What do you have? What do you have for 2910,824? So the service should take the CIT rate to be 30%. So CIT at 30%. What do you have? Help me. What's CIT at 30%? Let me pull up my calculator too. That's 3058. 3058. 3058. 823 minus 175. And times 30%. That's 865. The company told us that we should take CIT at 30% now. Abi? Yeah. So that's it. This is what we're going for. Yeah, good. Please snap the question. I'm there now. Please snap the question. I beg you. Please snap the question. Let's be fast. Okay, somebody said that profit is wrong. So that should be 3058. 823 minus 175. Okay. We did 3, 823. 10 times 3. 865,147. Okay, good. Thank you. I have corrected the total profit. Okay, good. I've corrected that total profit. Now, 2024 YWay. 1 1 2023, 31 December 2023, right? I would say adjusted profit. That will be the balance of 12 months. So that's going to be 12 over 17 times 10.4 million. Seven three four one one seven six. All right. Good. Then I would say less capital allowance for the year. All right. How much is the capital allowance for the year based on what we have here? 960,000. Good. 960,000. So capital allowance utilized will be how much? Capital allowance utilized. I can take the whole of the capital allowance. That's 960,000. Then I'll come and take the whole of the 960,000. Then unutilized capital allowance. Carry down. How much is that? That's nearly right. So your total profit is how much? How much total profit? Total profit, how much is that? You get 7341176 and it's 960,000. That's 6381176. Right? So my CIT at 30%. What do you have? Don't worry. Okay, I will treat it. Don't worry, I will treat it. The question had already told us to ignore education tax. Ignore education tax. Is here. So since the government has told us to ignore education tax, although even by virtue of our new law, education tax is not applicable. But don't let me flog it now. By the time we get to that CIT part, I'll flog it. So Emperor, that's the third rule too. It has been adjusted. So don't worry. By the time we get to that place, we'll cross it. What we are doing now is loss relief. We are there, we are still at the surface level. Don't you see that's what I'm saying? That those people that did accounting and those people that did tax a long time ago, they will stress us. They refuse to delete this thing. Now they refuse to delete everything now. They're now stressing us. It's you that know it is you we are stressing. Abby. So don't worry, when we get to that bridge, we'll cross it. Emperor. All right. I hope this is correct. 1914. Three five three. Is this fine? How did we get 10.4? Which 10.4 is talking? This is 10.4 is in the question. That's why I wanted to show the question alongside the solution, but a lot of people said it's tiny. A lot of people said it's tiny, but there's no way you guys will still have to cope, because by the time I'm dealing with long questions, I can't cope with me scrolling up and down. So you still be forced to cope. Perhaps if you want to join the class, maybe you should get a tablet or stuff of bigger screen. Don't join. It's not advisable you join with your iPhone 14, 15 with smaller screens. They will not be very helpful. So you join with bigger screen gadgets so that it's going to help you. So Ekundayo, is your video quality that is the issue. So go to settings. There's something that looks like a knob. So click on it. Once you click on it, click on quality. And once you click on quality, you get higher picture quality. That's it. If you do that, you'll get the correct thing. 25 year of assessments. Let's quickly move on. And this is where we are now. That's 1/1/2024, 31 December 2024. Abi? Is it profit or loss we have? We have loss of 6.3 million. Abi? So loss for the year. And that's what we want to look at. Is even the loss river is a major issue here. 6.3 million. Abi? So if we have 6.3 million loss, then it means that our unrelieved loss carried down will be 6.3 million. Right? Then we'll move straight to capital allowance. So my capital allowance for the year is how much? 195,000. But you cannot give what you don't have. You can't make loss and still be utilizing capital allowance. So I have unutilized capital allowance carried down 195,000. Right? It then means that my total profit for that year is nil. And for that reason, my CIT for the year at 30% is also going to be 0. Right. Do you get? That is that about 2024, 2025 year of assessment. 26 year of assessment. You say 1/1/2025 to 31 December 2025, right? Is it profit or loss? It's also a loss. So loss for the year was how much? 1.4 million. Abi? Then you have unrelieved loss brought forward. How much is it? 6.3 million. Loss for the year is 1.4. So the two of them is what will now be the carried down for that year. Right? So I will say loss unrelieved loss carried out. How much is it? 7.7 million. Again, I will close this chapter and move on with my life and say unutilized capital allowance brought forward 195,000. I mean, the capital allowance brought forward for the year, sorry, is how much? 420. How much do we have in total? That's unutilized capital allowance. All right, how much is that? How much is that? I thought, what's the, that's 615, right? Total profit. Right, 30%. All right. Now 2026 to 31 December 2026. Right. Now, is it profit or loss that I have? Profit, have we? Adjusted profit. How much is the profit? 3.6 million. Then you say unrelieved loss brought forward. I have 7.7 million, right? So I can relieve loss. I will say loss relief. But don't forget, we cannot take out more than the profit. We cannot take out more than the profit. So you cannot take out more than the profit. You have 3.6 million. All right. In that case, I would say unrelieved loss. All right, how much is that? 4.1 million. And obviously, you come and then say nil, right? Then I will then move on to say unutilized capital allowance brought forward was how much? 615. Then capital allowance for the year is how much? 180,000. So what do I have? Unutilized capital allowance carried out. How much is that? 795. 795,000. No, you are not removing it from the profit before loss relief. Remember the rule, rule 3. Loss will be taken before capital allowance. So if loss have taken up the total capital allowance, then there's nothing left for capital allowance to take. Total profit, nil. Then CIT at 30% will also be nil. All right. To be able to do this, you've gotten the concept very clearly. Any question? Any question? How did we get 180,000? Which 180,000 is that? Is in the question. All right. So we still need to digest. We still need to digest this one first. Okay. Digest it too. Please don't regurgitate too. Regurgitating is very dangerous. We digest, swallow immediately. Eat, swallow. Don't regurgitate. All right. Okay. So let's go over it again. So the first year, the company make a profit. What we just need to do is to deduct capital allowance, right? Deduct the capital allowance. But let's move to the year the company made a loss. So the loss it made is now carried forward, right? 6.3 is then carried forward. So because the loss is carried forward, we cannot take capital allowance from it, right? You cannot take capital allowance from it because it's a loss, right? And then in the year it makes profit, we will take loss before we take capital allowance. So the profit he made is 3.6 million. The loss he made is 7.7 million. So we can only take 3.6 million, right? 3.6 million. So 3.6 million minus 7.7, you have 4.1. So 4.1 is now the carried forward, right? So since that's the carried forward, it therefore means that 3.6 minus 3.6 is equal to 0. And you have to take loss before taking capital allowance. Once you've taken loss, you cannot take capital allowance. Yes, you can get it in black and white. I will share the note with you. The note is yours. All right. Any question? Any question? Any question? Any question? So if the okay, I would imagine there are questions. So if you have questions, just raise your hand so that people can still digest. That's not what I said, Ajayi. You misinterpreted me, oh, right? What I said is it's after you've taken loss, you will take capital allowance. So if after taking loss, you still have a bit of money that you can use to claim capital allowance, then that's fine. All right. So I have a few hands raised, but I'm sure Aunt must be paining Bumi already. It's been a while she raised her hand and she's not noticing already. And both of them are even Bumi self. So which of the Bumi are we supposed to answer now? Who among them is speaking? Okay, Rachel, please go ahead.
Hello, sir.
Yeah. Hello, Aima. Please go ahead.
Yes, sir. Please, I'm just concerned about the format for that 2027 year of assessment. That unrelieved loss brought forward and the loss relief.
Yeah.
Which one are we supposed to put in negative, like in brackets, since we are
Mm.
lessening one from the other?
Oh, okay, I get your point. I get your point. Sorry, stepmother can be very and very trickish. This one should be in jackets. Does it clarify?
Yes, sir. Thank you, sir.
Good. Thank you. You stylishly corrected me by asking question. God bless you. That's what I used to do when an angry lecturer, and if you say, sir, you make a mistake, he's going to change it for you or ask for a matric number. Abi? So you learnt it. No worries. So Naomi,
Okay, sir. Good evening, sir. Sir,
yeah,
please,
good
I
evening, man.
wanted to ask this for this um for the question. Is it possible we start the year with a loss? And if it's possible, are we also going to prorate the loss?
Yes, you prorate the loss. If you start a year with a loss, you prorate the loss. It's very much possible. You can start making loss from one set. Nothing is impossible.
Okay, sir. Thank you.
All right. Yeah, I think that's all. Yes, I will drop it. I will drop it. I will drop it. So even your questions going forward will be from past questions. This is just me trying to introduce you to the course. What we are doing since the day one of this course is a bit of introduction. Right. So we've not done the real thing. It's still introduction we are doing. Don't expect all these things I'm telling you, teaching you in the exam, oh, but you won't pass, you won't score good score in your number one if you don't know these topics. Your number one is what I've been treating since all these days. All right. Funke, your hand was raised and then you put it down again.
Yes, sir. So I just want to be sure this carry down and carry forward that you are interchanging. I was like, at what point do you know when to use what?
Okay, so
Because
brought forward is the one you bring from last year. Carried down is after you've added the current year to the previous year. That's when you have carried down. So carry down is what you have at the end. Brought forward is what you have at the beginning.
okay, sir. Thank you, sir.
You're welcome. All right. Yes, you can always claim all your capital allowance. Yes, you can always claim your capital allowance. All right. I think we're good already. Let's do one more illustration before we call it a night. What do you think? Like I said, you guys in this class are overthinkers. Let us stop imagining. Let's just deal with the question we have. Let's stop imagining. You get. Let's just stop. You get. What do you think? All right. Yes, the class is recorded. Obviously, you can even go back to YouTube and get the playback. All right, good. We're good. So, illustration 2. I made a mistake. I went to unmute my mic. To unmute your mics. Somebody have shown me that. Somebody have reminded me that I muted your mics already. You guys, I knew it. Time day limited. Has been in business for several years, but had adverse market conditions or business conditions in 2025, 2024. You are provided with the following relevant information. Year 2, 31 December 2023, 16.3 million loss. Oh, let's say, yeah. Year 2, 31 December 2024, 1.2 million loss. Year 2, 31 December 2025, 20 million, 22 million profits. Year 2, 31, no, let's say 19.4. 14.8. You are provided capital allowance. Twenty twenty four EYA 196,650. EYA 389,120. 26 YA 431, 380. 322, 150. Right. Determine the basis period and tax liability for the relevant years of assessment. Ignore development levy and tertiary education tax. Assume that the business turnover is over 100 million and CIT rate is at 30%. Are we on the same page? Are we on the same page? Who is this person asking FR class? This is not FR. This is advanced taxation. Are we together? Are we together? Can we continue? Can we continue, please? Are you guys tired? Are you tired? Good. Good. Thank you. All right, so let's quickly do solution. Time day limited. Determination for basis period, assessable profits for 2024 to 2027 years of assessment. All right, so that's correct. We have 2024 A 23 to 31 December 2023, right? How much is the profit or loss? Loss for the year. Life really eats this man hard. 16.3 million. Abi? I have one relieved loss. Please don't do thumbs down. Oh. Don't let them take down this stuff. Yeah. All right, can you hear me? Okay. So I leave loss carry down to the 16.3 million, right? Then capital allowance for the year. Will be how much? 196 650. So you have unutilized ATAX as 196 650. So then we'll say total profit will be what? Right. CIT at 30% would then be what? Be nil. Change 5 YOA. I will have 1/1/24 to 31 December 24. This man still made loss. So how much loss did he make? 1.2 million. So unrelieved loss brought forward, that's the one for last year, at 16 million. So add loss for the year, that's 1.2 million. Total loss unrelieved loss carried down, that's 17.5 million, right? So I then have unutilized capital allowance carried down, how much? Sorry, how much is it? 96,650. Now have capital allowance for the year. How much is that? 389120. Is that correct? So I have unutilized capital allowance carried down. How much is that? Let me know. How much is the unutilized capital allowance carried down? You're not helping me. 585773. Right. So in this case, over my total profits, that will be what? Nil. Right, nil. But let's move straight to 2026 year of assessment. So then do we have profit? 1/1/2025, 31 December 2025, right? So you have profit for the year, which is the adjusted profit, Which is adjusted profit? 19.4 million, right? Then we have unrelieved loss brought forward. How much is it? 17.5 million, right? So now, in this case, the loss is lower than the profit. Now, if the loss is lower than the profit, you take, so I have loss relief, right? How much is that? 19.4, I'm sorry, 17,500. The same thing we're taking out here, 17,500. So I have unrelieved loss carried out. How much is that? I have nil. Then what is 19.4 minus 17.5? What do you have? What do you have, please, everybody? 1.9. Good. So I have capital allowance. There's one utilized capital allowance. How much is that? 587, 770, right? Then you can also take the whole of the capital allowance. You can take the whole of the capital allowance, right? So because the profit is much. Right? It means we have our unutilized capital allowance is nil, abi? So total profit. What do I have as my total profit? It's 585. Okay. Sorry, it's my site. Oh. When they were advising me to stop eating granite, I was joking. All right. So what do you have? Open with the numbers. Is it that you guys left me to go and sleep? 1314230. So CIT at 30%. What do you have? Please help me. 394269. 394. 394. 397. So I have 1/1/2026 to 31 December 26. You say profit is how much? 14.8. Hey, thank you. That was an oversight. Capital allowance for the year. How much is that? 431,380. 431,380. So capital allowance utilized should be, what should you have? Please add it up. Please add it up, please. Let's be fast because there's no time. I'm treating it already. So I have 585, 770 plus 431,380. So I have 1017150. 7 150 1017 150. Right. So the total profit will be how much? 882,850. Okay. 64855. All right. Hope that clarified. Thank you very much for calling my attention to that. All right. Then we have since we don't have loss, so we can then move on to capital allowance. What is the capital allowance? 322. 150, and then say capital allowance utilized. Right? So what do I have? Yes. 14,800 minus 14. 14,477, 850. That's the total profit. All right. So that's the total profit. It means I have my CIT at 30%. Plus 434. Thank you so very much. Any question? Any question? Any question? So let me allow you speak one or two. Any question? Good. So you'll understand. Okay. I would show my screen. All right. So, Alaji, please go ahead.
Well done, sir, for your time. In fact, you have done a very good job. But what I want, sir, I will be very happy if you can share this solution with us so that we can practice at our own convenience
It's
because
not
it's very important.
the solution is the solution is not for me. It doesn't do anything for me by adding it.
Okay,
So I will send it to you.
okay, sir. Thank you so much, sir.
You're
Thank you for
welcome.
your time. Thank you for your time.
You're welcome.
Thank you, sir.
Yeah. Any other question? I can will not test. Like I said, for your level, I can will not test loss relief. It's just that you won't be able to answer number one without loss relief. Your number one is 5 topic questions. So what we are still attempting to do is to build up to solving number one. That's what we are trying to do. It's a 5 topic question. So don't worry yourself. Just follow us, JJ. We'll get to destination together. All right. So if there are no questions, I think it's a good time to end the class. So in my next class I will be looking at capital allowance. So my next class will be me discussing capital allowance with you. Before that, I would have shared, I hope to, or I'm even thinking that it's good that we have class governors, right? That will be reminding of something. So ideally, I'm supposed to share a brief note with you, something and the on capital allowance before the class because it's a lot of things. I don't want to use more than a period. I don't want to use more than a period for the capital allowance so that we can get to these things. And capital allowance has been made simple thanks to the Nigerian Tax Act. So a lot of things has been scrapped. There's no more initial allowance. Annual allowance is now on straight line basis. So no need to prorate anything again in the first year. So it's pretty much simple and straightforward. So everything. So that demon that used to be initial allowance, investment allowance, all of those rubbish have been scrapped. Again, if you are the type that went to school, if you did tax before 2019, I'm begging you, try as much as possible to make sure that you format everything you know before the next class so that you won't be asking us, does this not exist again? Just assume that it doesn't exist. Whatever we go mention in the class does not exist. You get what go cannot do does not exist. You get so everything. And don't worry, you will pass this exam. If you follow simple instructions, solve questions together, then passing the exam is non-negotiable. Allow allowance exists, but now on straight line is just 2020, 2020, then the final year. No more 10 era. It is now 19% in the year. So you have 1% tax non-value. All of those rules you'll find out in the next class. It's simple, straightforward, no thinking required. Any question for me? If you have any question or comments, please pass them now before we call it a night. Right, if there are no comments, thank you again for joining tonight's class. Do enjoy the rest of the night. Bye-bye.
Good night, sir.
Yeah.
Thank you
Good
very
night,
much,
sir.
sir. Lovely morning.
Good night.
Good night, sir.
Good night.
Good night, sir.
Thank
Good
you
night, sir.
very
Thank you very
much.
much, sir.
Thank you, sir. God bless you.
Amen.
Amen.